Christmas has come early for mortgage holders, perhaps. Depending on how quickly your bank reacted to the latest OCR cuts, the official cash rate cuts from the Reserve Bank, and how long you've got your mortgage locked in for. I suppose that's the other factor. Joining us on the program now from Christian Savings, Andy Milne. Andy, kia ora, thanks for your time today.
Kia ora, Andrew. Great to be with you.
Now, this was well forecast. This was going to happen. Yes, a slightly bigger cut than we expected last time, but one more time, a cut to the official cash rate. Have we hit the bottom? Is it all up from here? Do you think, Andy?
Well, the received wisdom, the markets would suggest yes, this might be the last one. And look, as we've talked about several times, Andrew, the Reserve Bank have been, watching the economy continue to struggle, inflation, not quite crushed, and so they've been balancing those two sort of imperatives, and this latest cut was, I guess, just to really solidify and encourage those green shoots in the economic recovery that we've been talking about. So what's really interesting in this cut is that all previous cuts have been sort of followed by language from the Reserve Bank that suggests that they're continuing to watch with interest and that further cuts might be possible.
Yeah.
Now, this latest announcement was notable for the change in language around that, and the suggestion from the Reserve Bank that's been picked up by the markets is that they, to your earlier point, yes, in a sense, they do feel that this is probably going to be the bottom of the cycle. And the reason for that is that the Reserve Bank thinks basically they've done enough to set a sort of a neutral or a growth level of the OCR that's going to stimulate economic recovery. So a lot of the indicators, we've talked before about, the long, dark economic winter that we've had with retail and other sectors doing it tough. That hasn't disappeared by any means, but there are green shoots emerging, and the Reserve Bank thinks, well, we don't want to add too much fuel to the fire. We think we've got the Reserve Bank seems to think we're in the Goldilocks zone, perhaps. Things are just right for now.
Yeah.
So the market has responded to that by, what's really interesting is what hasn't happened. Mm-hmm. So we actually haven't seen a dramatic reaction from the banks to this cut. So instead of a full 25-point cut, applied to floating rates, floating interest rates have probably come back about 10 to 15 points, and the term deposit rates haven't really moved down much at all.
To be fair, though, some of the banks might say, as we said beforehand, this was much anticipated. People knew this was going to happen. Some of the banks are saying, we've already preloaded those cuts recently, no change needed. Is that a fair comment in some ways?
That's certainly true in the fixed rates. Yeah. So markets tend to pick up these signals well in advance of the OCR moving, and sort of anticipate those cuts. So the fact that there weren't really any short-term movements is, I guess, a testament to the predictability and the stability of what's coming out of the Reserve Bank.
Yep.
Interestingly, though, is the change in the longer term interest rates. So if you look at what the banks are offering for 2, 3, 4, even 5 years, is what we call an inversion of the yield curve.
Yeah.
So for a long time, we've seen that interest rates, the longer you go, the longer you're prepared to fix, the lower the rates are, which sort of suggests that banks think that money is going to get cheaper over time.
Yeah.
What we've started to see is a bit of a flattening across the 2 and 3 year terms, but with an uptick in the longer term 3, 4, 5 rates.
Honestly, everybody's saying, hey, this is as low as it's going to get. Let's lock in for as long as possible. The banks, of course, wanting to protect their margins in that.
There's some merit to that, thinking that we're going to see a plateau, and the Reserve Bank's language suggests that they see that the OCR is going to hold at this current level, 2.25 for for most of 2026. If it's going to move in any direction, they're picking that there may be an upward bias in 2027 onward, and that's why I guess the banks have kind of said, look, from 27, 28 onward, rates are going to be slightly higher. So yes, based on all information, it seems likely that this is the bottom of the cycle. There are obviously, in any scenario, there are risks. There are things that could change. Any economic shocks, up or down could change that. But for now, it does appear that this might be the bottom of the cycle.
The risk of these shocks is even more of a reason to lock that down. Of course, not everybody has the chance to refix their mortgage between now and Christmas. It may take a while to see the positive benefits of these changes in our economy. What's your thoughts on that?
Well, that's right. I mean, as we've talked about before, New Zealanders love a fixed rate, and the 1 and 2 year rates are often the most popular. So it's quite likely that I think at any given time, 80% of our mortgage book is fixed. Yep. So it is going to take some time for these newer rates to move through. But I'm certainly expecting that. As rates roll off, the trend towards fixing for 1 to 2 years, I believe we're going to see a move to fix longer, into hopefully a period of greater interest rate stability.
And hopefully that is the case. And honestly, more money in your pocket, or even better, paying your mortgage off sooner is very good news indeed. And it is a bit of a changing of the guard as well. I mean, it would be a little bit bad form for the acting Reserve Bank governor to give indication of what the new Reserve Bank governor is going to announce next time. Yes, it's part of the economic cycle, but there's a new Reserve Bank governor in town. We wait and see whether or not the way she implements monetary policy will be different.
That's right. So Dr. Andy Milne is a former member of the Swedish Reserve Bank. Took over. She took over just this week, actually. I think Monday the 2nd, or Tuesday the 2nd was her first day in the big chair, so to speak. Yep. So Deputy Director Dr. Christian Hawksby has relinquished the reins. So and it's going to be interesting to see whether that change of leadership sparks a change of direction. Yep. Dr. Brennan's talked about having a laser focus on price stability, which means keeping inflation low. So, which means then she may be maybe quicker on the trigger to raise rates if things get out of balance. Look, who knows? But her first OCR review on her watch will be in February, I believe. So be interesting to see if there's any change in language or commentary coming through then.
And see what the economy does in response to these latest cuts, of course, over the Kiwi summer, where generally we tend to be optimistic if the weather behaves itself. Andy, I very much appreciate the work that you do at Christian Savings. Of course, christiansavings.co.nz, the place to go to find out more. To you and yours, Merry Christmas, sir. Thanks so much for being on the program.
Merry Christmas to you, Andrew. God bless.
Hey, thanks very much for joining us in the Breman studio. Thanks very much for watching the interview. It's kind of nice to have an audience, actually. And if you did like what you watched, then do give us a like, do give us the thumbs up. And if you'd like to see more interviews like that one, or perhaps even better, subscribe and those interviews will come straight to you. Don't forget to turn on your notifications, and we'll see you in the next one. Cheers.